And now for tonight's presentation, yeah, sorry you didn't get much of that, Sven, I guess. But anyway, as you probably know, you have fans in Denmark too, because you have a very large newsletter and a very large community. And one of your fans is actually located in our office, and he's been following you for several years. And he's one of the reasons why we chose to invite you here, because he's been following you, and he says this guy, Sven, he's having some very, very great stock picks, and he bought actually many of your recommendations and had yeah, some for instance, he bought Gazprom, he bought Porsche, he bought Fiverr, and all of those recommendations have been at least 50% to 200%. So he said you really have to get this guy Sven on, because he's a very good stock picker. And then we started to investigate a little bit more, and I think it's very fascinating when you look at your website. You can see you have a quite fascinating lifestyle, in the sense that it seems like you are traveling around most of the year and still manage to have several business going, and at the same time being a super investor that's interviewed on the main financial media of the world. So we would be very interested in hearing a little bit more about your life, but also about the free stocks that you're going to talk about tonight, which is free undervalued stocks, and that's what we are going to speak about tonight. So I think I'm going to leave the screen for you, Sven, and change it over to you, and then you can take it away.
Okay, thank you so much for this great introduction, Christian. Just sharing my screen here. Absolutely delighted to be here and to speak to your community. As you've already mentioned, I like traveling, and I'm actually in Quito right now, Quito, Ecuador, and I am going to go on a boat in the Galapagos Islands on Saturday with a group of readers and co-investors and friends from the investment industry, which is one part of my investment community that I've built. I've got a website which is called undervaluedshares.com, where I write about undervalued investments. I'm a value investor first and foremost, but I also look at growth investments, and in many ways I think these are actually pretty much the same thing, but just described in different terms, but I'll come back to that later on. I think what people probably should know about me is that, and I've just thrown together a few slides. It's not going to be a massive presentation. I'll do this in a very improvised way, and it'll be great to have lots of questions hopefully afterwards, so I wanted to leave lots of time for that. I think what people should know about me is that I started investing very early on in life. It's really been a vocation, and I did actually skip high school occasionally to go to shareholders meetings and ask lots of questions to CEOs and to board members and to do research on the ground. I started doing that when I was 16, and at the same age I also started to write about investments. I became a freelance journalist very early in life, and I always found that putting your thoughts down on paper helps you a lot to structure your thinking and your analysis, and to eventually also publish it means that you put it in front of an audience that is very critical and that can give you feedback. And I do very strongly believe that writing about investments makes you a better investor as well. So I always try to inspire the next generation, start a blog, write articles, write research reports, or join a club, join a community like yours. Your members are already obviously onto the right thing. And I've also always combined all of this with traveling. It's something that I'm quite known for, and to me it's second nature, but people are fascinated by it, so I always have to talk about it. I do travel around the world quite a lot, and I find that this is conducive to finding good investments, and it's primarily so useful because you meet interesting people if you make the effort to meet people. I like to get different ideas from about areas that I know nothing about, or to look at subjects from a very different perspective. And I think that's one of the most valuable things you can get out of traveling, especially nowadays in this world where so many subjects are polarizing or quite divisive. I think it's useful to go to very different parts of the world and listen to how they see a certain subject. And you'll sometimes be surprised how you have completely opposing views of some of these important subjects that feed into investing and the economy and finance. And traveling allows me to pick up on that and to build it into my analysis and to build it into my ongoing quest to find new investment opportunities and to find them somewhat off the beaten path. I like to go to into sectors and countries and ideas and themes that others may not have picked up on, but which I think will become more widely known over the next 1 or 2 years. And I'm doing that, and I'm coming to the end of talking about me, because I think it's much more interesting to talk about stocks. But just to give you some more background, I'm doing all of that from my home in the Channel Islands. I live on this very small island that I've put a photo of onto this presentation. It's an island of just 550 people, but it's self-governing. It has its own tax laws. It has its own head of state. We don't have cars. We don't have paved roads. It's a very picturesque and unspoiled and old-fashioned conservative kind of society that I live in. And that's where I go to write and to read. I also have to do a lot of reading. It's a very quiet place, as you've probably guessed. And then I travel the world, and I do that with readers as well. As I said, I'm going on a boat with 14 of my readers and colleagues on Saturday for a week. We'll talk a lot about investments. And this is all part of my mission and my passion to make investing fun, accessible, and obviously I want to help people to learn more about it and to be successful in their own right as investors. So that was enough about me. I've brought 3 stock ideas along, all 3 of which are from very different areas and themes. And I want to start with one that I think every one of you will be familiar with to some extent, at least. It's a brand name that is globally known. It's the German company Bayer, which has always been known as a pharmaceutical company first and foremost, which is not technically correct anymore, but I'll come back to that in a second. Something that I quite enjoy in terms of as your investment career progresses and you're not that young anymore, you can look back on the history of companies and you feel like you've been there, and you have a broader perspective on the longer term ups and downs of a company. And I do have that perspective in the case of Bayer, which in the early 2000s had a scandal, a huge legal case where a pharmaceutical that they produced unfortunately turned out to have very bad side effects, and it led to deaths and to many people getting injured. And that was the Lipo-Bay scandal. The pharmaceutical was called Lipo-Bay. And as a result of that, Bayer went through a tremendous crisis. In the 1990s, Bayer was the most valuable German company. And as a result of that scandal in the early 2000s, it lost temporarily 84% of its value. However, it also recovered afterwards, and it gained 700%. And it did so because it was a strong company at its core. It had a strong balance sheet. It had amazing products. It had the management team to put these things to right and to make sure that after a period of 2 years, the company could advance again and move forward. And that led to a stunning recovery and people making lots of money from a blue chip. And this is the important thing. This is a very liquid stock. This is not a small cap stock. It's not a speculative company. It's been around for 150 years. And I have been researching and following Bayer over the last couple of years again, because they had a new scandal, the Roundup scandal. Roundup is the glyphosate-based pesticide that is used to kill weeds. It's used around the world. It's obviously very famous. It's a very controversial product, but it's very successful, and it got Bayer into a set of legal cases in the United States with American retail customers that claim that this particular pesticide has given them illnesses, particularly cancer. And it's a very tragic case. There is probably something to it. This product probably shouldn't have been given to retail customers because they might not use it in the right way. With industrial customers, it's a different story. They're properly trained. They've got machinery to use these, to use Roundup on a large scale in agricultural operations. Roundup is controversial, but has also done a lot of good in the world. It has made agriculture more effective. It has made food more affordable in those parts of the world that may not be so rich. So there are 2 sides to this story in any case. But Bayer has had to sustain very expensive lawsuits, and it has set aside $16 billion to deal with these lawsuits. And as a result of all of that, and this involved bad media coverage as well, the stock has lost almost 70% of its value again. Now, if you read any media article about Bayer right now or in the last 2 years, you will feel that Bayer is really only just producing Roundup and glyphosate products, because that's completely dominating the media reporting. But when you check the actual numbers, and that's what I do in my work, it all looks very different. So these legal cases all go back to retail customers in the States. It's not the large industrial customers. And the retail customers in the States only make up 0.6% of the revenue of the buyer group. And even if you look at Roundup in total, it makes up just 6% of the revenue of the entire buyer group. So buyer is really 94%, something entirely different than Roundup. But based on the media reporting, you would think it's 99% Roundup and nothing else. That has led my analysis, and I've written a very extensive research report about this, to conclude that from next year onwards, I think things are going to turn around for buyer. And something that I look for in my work, and this is really something I think for you to keep in mind if you aren't already familiar with the term, I'm always looking for triggers. They're also called catalysts. It doesn't just, it's not sufficient if you just have a stock that is cheap. There needs to be a reason that triggers a recovery of the stock and a higher valuation. A stock can stay cheap for very long, and you don't want to be in one of those so-called value traps. You want to be invested in a stock that eventually turns around and that gains in value again and is priced at a higher valuation multiple. And there are not just one or two or three, but literally a dozen different triggers that will probably work to buyers' advantage in the next 12 to 18 months. And even if only 3 or 4 of them come true, then I think buyer stock has considerable upside potential. The stock is currently trading at a price earnings ratio of just 6, and it has a dividend yield of 5%. And there are a whole number of parts of the buyer business that look very promising in the next couple of years. For example, they've invested heavily into new gene therapy on the pharmaceutical front, in the agriculture division, the so-called crop science, where they work to use life science to increase the efficiency of agriculture operations. They've now completed the acquisition of Monsanto, the company that they purchased in 2016. Is now that acquisition is concluded, and they now can reap synergy effects from that. Bayer might also sell its consumer healthcare division. It would probably get about 15 billion euros from that. That in turn could also be used to pay back some of the debt that Bayer has. Currently, the company is quite heavily in debt. So you can see that there is a whole number of factors appearing on the horizon. In the meantime, while we wait for that, the company has tremendous cash flow. Its operative business, its core business, is highly profitable. Once you leave aside the one-off costs for issues such as the legal cases in the States, Bayer is actually earning around 7 billion euros. And that's why they can also continue to pay a dividend despite this legal issue that they've been going through. So all in all, Bayer is very much an undervalued stock. It's a high quality company. It's been around for 156 years. It has a lot of hidden strengths. And if you start reading up about the company, then this list of potential triggers that I've summarized here very briefly will make a lot more sense for you. And you can also find more about it on my website. Moving on to the second company, this is something closer to home for most of you, I guess. It's a Swedish company. It's called Modern Times Group. It used to be a television company. Some of you might still know it as the old Modern Times Group, but it's now a very different company. It's producing games, and it's into gaming and esports. And it's very important to make clear that it's not about gambling. Gambling is something very different. Gambling is about where you bet money and you can make more money at the roulette table. Gaming and esports is about computer games that you play for fun, and esports is about competitively playing computer games where multiple players meet up and they play against each other in multiplayer games. And this is an industry that, of course, it's primarily popular with a slightly younger generation. I've started to read up on it recently, and I was absolutely fascinated by some of the numbers. And I just wanted to put these 3 illustrations on here to show you what I think are the 3 most powerful and the most noteworthy figures about this industry. First of all, global gaming is now larger already than global film and music combined. I didn't know that, and it just goes to show what a large number of people are now into gaming and are spending money on that. That market is also growing rapidly. It's projected to grow at 16% per annum between 2020 and 25. So it's more than double during that period. And very, very importantly, it's an under-monetized industry. What do I mean by that? So you can nowadays watch esport events on the internet where thousands or tens of thousands of people gather in arenas, and then with hundreds of thousands or millions joining online to watch people play computer games in a competitive way. And of course, for example, you can sell tickets for that, you can sell sponsorship for that, there's merchandise. And relative to other events and sport events, the so-called e-gaming and esports is still heavily under-monetized. So it basically means that sponsors can get into this at a very cheap price right now. It's good value to sponsor one of these esport events. And that's why massive money is currently rushing into this area. And with the pandemic now hopefully coming to an end and events becoming possible again, real life events as well, and hybrid events where online users join people who participate in the real life event, that sector should be doing very well indeed. And I've just wanted to show one of those photos for those of you who have never seen something like that before. Esports is now actually already happening in arenas, and there's long been discussion also whether it should actually one day become part of the Olympics. That's a very controversial discussion because they're adding anything new to the Olympic always triggers a lot of discussion about to what extent the Olympics should be innovative and accept new sports, but it's probably going to happen sometime during the 2020s is my gut feeling. And that's why I'm very excited to look at Modern Times Group, a Swedish company. As I said, it underwent a transformation. It went from television group, where it had a number of issues, to now a purely a focused gaming and esports company. It owns the world's leading esports organizer, and it's now developing computer games around the world in using subsidiaries in New Zealand, in India, in the UK, in Sweden, Germany, and in the United States. And something very interesting has happened, and that's a point that I can only recommend you read up on further and you do your own research about. In 2020, a very famous and very successful European investor has bought an 8.5% stake in the company. That investor is called Active Ownership Fund. It's an activist fund, and it's the most successful activist fund in Europe. They've produced spectacular returns for their investors over the last 5 years. And they decided to take a significant stake in Modern Times Group in 2020. And they are a relatively quiet activist. They usually work behind the scenes. They try to help companies to improve their performance. And even though it's never been publicly admitted, but I bet they've had a significant role in bringing on board another investor from the United States who joined the list of shareholders in spring 2021, which is what I'm showing on this chart. In March 21, the American private equity firm Atairos has bought a 5% stake in Modern Times Group. Atairos is not just any private equity firm, it's the private equity arm of Comcast, which is the world's largest television group. So if you basically add up one and one together, you've got the world leading esports company, which is currently heavily expanding its number of games that it's offering. And you've got the world's biggest television operator coming in as a 5% shareholder. It probably means they're plotting and planning to take esports to a much larger audience through their television channels that they've got affiliated with the Atairos private equity platform. Atairos paid 112 Swedish kronas for each of its shares, and it's currently trading at 105. And there's, for example, one Swedish investment bank that has worked out if these plans come together, then by the end of 2022, that stock should probably be trading around 270. So that's more than 1.5 times profit, so 150% profit if that works out. And very importantly, again, speaking about trigger, this is something that I always emphasize. On December the 7th, so that's 6 weeks, Modern Times Group is holding an investor day, a capital markets day, to present itself. And the company has undergone great changes in the last 12 months. And this will be the first time that the company will, I expect at least, will go on the offensive and present itself and its future plans going from 2022 forwards, with this new set of major shareholders as well. And I think that the company and the stock is going to benefit quite significantly from that. And that should lead to the kickstarting of this investment case. And as I said, It's got quite significant upside, and currently you are buying this share at a lower price than what Tyros was very happy to pay. And I think that's probably the most important metric to know. There's a lot more to say about it. It's also on my website, and I'll leave it at that, and you can research it yourself as well using the web and all its wonderful free resources. Over to the third case, and I've already been speaking longer than I thought, so I'll keep this one a little bit shorter. This is a company that is basically the Amazon of South America. So whereas Amazon is obviously the strongest e-commerce retailer in the United States and in other countries around the world, in South America, it is Mercado Libre, which is dominating the field of selling stuff online and providing marketplaces online. And I first came across this company, and this is where we come full circle with regards to traveling. I first came across this company at a New Year's party in Uruguay in December 2018. I was there with friends in a very nice part of Uruguay called Jose Ignacio, and I heard about a guy who was supposed to be in town, Marcos Galperin, who is the founder and CEO of Mercado Libre, and he was already well known in the area, but he was not very well known globally yet at that time. He was already a billionaire. He had found Mercado Libre basically when he was a student in the United States, and the stock was trading at $400 at the time. Last year it hit $2,000, so it's been up 5 times. I wrote about it on my website at the time, about my discovery in South America. I have to say, had I not gone to that party and met interesting people in Uruguay, I would not have come across this investment case so early. And this is pretty much why I like to travel and meet people. I didn't write enough about it at the time, and I kind of regret that I missed out on this opportunity myself. However, luckily enough, the stock has recently come down, as this the chart at the top, at the bottom of the slide shows. It's come down from $2,000 to currently it's trading at $1,500. And I think it's a very good opportunity to look at now if you're into growth stocks and you want to buy a high value, a high growth stock that is dominating its market and is operating in very interesting markets. If you want to buy into that at an attractive price, then it's now a good time to look. And the next slide will show you in a bit more detail why. There is a great in-depth profile about the founder of Mercado Libre on the internet. It's a free article. It was published by the Generalist in May 2021, and I can only recommend that you read up on that to educate yourself about the company. Just like Amazon, Mercado Libre has expanded into all sorts of other areas. It's not just selling books online, it's selling literally anything online. It's providing a platform for external merchants. It's also providing payment services, credit, classified ads for cars, and you name it. It's a real empire of a company now. It's worth $75 billion. And the most interesting part of it is probably also the part that has received the least publicity and attention by investors so far. As this quote that I put on there is clearly saying, the founder, Marcos, has a bit of an obsession with bringing financial services to South America. South America is an underbanked region of the world. Many people here don't even have a bank account. They use cash, or since recently, they might be able to use some apps for that. And obviously, if you have a company that is selling stuff online, then it's very helpful to your business if you also have a division that can help people with paying for things, which is payment providers and credit solutions and things like that. And Mercado Libre is massively moving into that sector right now. And you could even say that it is becoming kind of a fintech company. So far, it's always been known as a e-commerce company, but right now it's a fintech company. And if you add up what the company has already achieved in this field and what its plans for the next couple of years are, then you could come to conclude that the value the company can create in this particular sector in fintech is probably a $70 billion opportunity. And right now, Mercado Libre is valued at $75 billion. So you could say that the fintech division alone could, in the foreseeable future, be worth as much as the entire company right now, which is just one of the aspects that points towards the company being quite cheap in comparison to other comparable companies that are listed on the stock market. And I'm showing this in the illustration at the bottom of this slide, compared to, for example, Amazon in the United States, or for example, Allegro in Poland, which is also quite well known. The stock of Mercado Libre is considerably cheaper relative to its growth potential, and is probably offering better growth perspective, and it's offering a better deal for buying into these growth perspectives and benefiting from them over the next couple of years. And that also ties in with what I'm showing at the top of this page, which is the fact that countries like Argentina, Brazil, Chile, Colombia, Mexico, if you include Central America, these countries are not yet as advanced with e-commerce and buying things online and doing online transactions as, for example, the United States or China. But these percentages are catching up, and Mercado Libre is probably a few years behind Amazon in terms of penetrating its local markets, and these local markets are all across South America, but it's catching up, and it probably has more growth potential left because the markets are comparatively less mature. So you're buying this at a lower valuation and you have higher growth potential, and that's why I included this in today's presentation of 3 stocks that are undervalued in my opinion, and which offer pretty immediate upside potential. And when I say immediate, I mean the next 6 to 18 months probably. So in conclusion, and to briefly talk up my own book, and to also tell you where you can find more information about this, I publish a blog which I'm very passionate about. Every week I publish a free article. If you want to get to know my work, then head to my weekly dispatches. You can sign up for an email list, or you can just simply check every Friday for the new article. It's entirely for free, and that introduces you to my work and gives you interesting investment ideas. For example, Mercado Libre I featured in the weekly dispatches in, I think it was January 2019. And if you want to read in-depth research reports, then you should check out my annual membership, which is just $49 a year. That's actually per year, not per month. So I'm probably 10 to 20 times cheaper than most other websites. I want my product to be very accessible to anyone in the world. I've got paying subscribers in over 80 countries. And I see this as building a community. So my heart is in this, and I want to offer great value to everyone who's out there. And with that, I've spoken a lot longer than I thought, but I hope it was interesting, and I hope that we've got lots of questions to talk about. Over to you, Christian.
Thank you very much. That's very inspiring, and 3 stocks I'm going to look more into myself. I actually own Mercado Libre, so I know about that one, but I didn't know the other ones so well. So that's certainly something for doing more research into. I was thinking, we all already had some questions, so I'm just going to start reading them, and anyone that wants to ask a question can just put the question in the question box at the right side, and then we are going to take at least as many as we can within this time, because we're a lot of people online now, and but we'll just dive right into it. So Tia is asking or saying that Monsanto has a bad connotation and history. Is it a trap for future scandals if the company is not ethical to start with?
This is what I mentioned with the controversial perspectives of Bayer and Monsanto, its main subsidiary. There's really 2 sides to that coin. And I'm the first one to say that with these retail customers in the United States, there's been a genuine problem. But there's also very much a different side to it. And I also feel very strongly about that one. It's that Monsanto is making food much more affordable, and it is dealing with important subjects such as minimizing the amount of crops that are lost and enabling farmers and agricultural operations in developing countries to be more productive. And when that product is used properly, then it has no more side effects than any of the other chemicals we're using. Everything we're using does have side effects. Pharmaceuticals, vaccinations right now is obviously a very controversial subject as well. I would ask everyone and inspire everyone to look at both sides of these arguments and then to make their own judgment. Not everyone likes to invest into pharmaceutical companies. Not everyone likes to invest into Chinese companies. China is a politically very difficult country as well. Everyone has their own exclusion list. I don't think Bayer is an evil company. I think Bayer is doing a tremendous amount of good, and they should get more credit for that. and that counts for Monsanto as well. But these different and opposing views will never go away, and that's part of the fabric of this company. But I don't think that's going to stand in the way of the stock turning around, because the metrics and the financials behind this company are extremely strong, and ultimately that's what's going to drive the stock price.
Okay, and Ole has another question about Bayer. He's saying, how did it recover after Lipobay, and what will make it recover now? And then he has another question: how will raise in interest affect earnings?
Yes, so at the time of the Lipobay scandal, Bayer was still primarily a pharmaceutical company. And pharmaceutical companies also have cycles that they go through, because they invent a new product or several new products. These are patent protected for a certain period of time. Eventually, these patents expire, and then earnings from these products go down, and the company has to struggle to develop new products and rebuild its earnings. And at the time, Bayer was just simply very good at developing new pharmaceuticals and turning them into so-called blockbuster products. These are products that have more than $1 billion in revenue per year. And that got Bayer back on its feet, and it basically was its core business that helped Bayer back on its feet. And I think this time it's going to be the same but slightly different, because now Bayer has two divisions that are on an equal footing. The pharma division is currently producing about 42% of the revenue of the company, and the crop science division, that's agriculture in the wider sense, it's producing 46% of the revenue of the group. So it's now the largest part of it. And in both of these divisions, Bayer has a lot of innovation coming up. So to give you an example, Bayer is spending more on science and research and development in crop science than all of its competitors, and it actually spends twice as much as all of its competitors. And in the pharmaceuticals industry, Bayer has been spending many billions over the last couple of years developing new gene therapy. This has received hardly any PR because of all of this reporting about Monsanto. And the gene therapies in particular are aimed at illnesses that currently there is no cure or no treatment for. And I've also spoken to scientists who say that Bayer is currently developing some of the best products and some of the best initiatives in that space, and that could help millions or hundreds of millions of people around the world. It would represent huge markets, and I think it's a combination of these two divisions that will get Bayer back on its feet.
Okay,
The other question about the interest rates, yes, if interest rates go up, all companies will be affected negatively by that, because virtually all companies have outstanding debt financing. So that's going to weigh on companies and on the stock market as such. There's no denying. I think the extreme undervaluation of the company, as I see it, will be the dominant factor. You always have different market forces pulling stock prices up and down. And I think Bayer is now trading at such a ridiculously low price that I think the interest rates are not going to be the dominant factor. I think it's the recovery of the company as a whole that will be the dominant factor in determining the stock price.
Camilla is asking, how do you see the future of Mercado Libre, considering the bad political situation in many countries in South America? And then she asks, should one expect volatility in the share price?
Yes, very good question. So first of all, it's important to know that Mercado Libre is actually based out of the United States. It's traded on the New York Stock Exchange. So this is not a company that's based out of a small South American country. And they have an inbuilt diversification of risk because they're operating in almost all South American countries, at least the ones that are large enough to be worthwhile operating in. There is political risk, but that has existed for the past years already. If you look back, Brazil has gone through some terrible times politically. The same is true for Argentina. Argentina has been basically in very difficult circumstances for most of the 22 years that Mercado Libre has existed, and Argentina has been the core market of Mercado Libre. So these political circumstances affect companies on a short-term basis, but longer term, I think the enormous demand by consumers to do things online, to shop online, to conclude financial transactions online, that's just going to be much stronger than any short-term political issues that they're dealing with.
Okay, and Kurt is asking, it's kind of a question. He's saying, like, you don't value dividend too much.
I'm actually a huge fan of dividends. It's just that this time, for the purpose of this call, I picked two stocks where dividends are not that important. So with Bayer, I think the dividend is very attractive because it's above 5%. It'll probably go towards 6%. And if you hold Bayer for a couple of years with the recovery that I expect there, the dividend could actually grow significantly. So you have a combination of increasing in value of the stock price, and every year it's paying out a nice amount of money to you. With Modern Times Group and with Mercado Libre, it's definitely not a dividend play yet because they're reinvesting everything into growth. It's a different kind of investment, and everyone has to place their emphasis wherever they feel they need to invest money, and whatever their preference is. But I'm a big fan of dividends, and I'm actually often accused that I write about dividends too much. So if you check my website, you'll see that there's a lot more about dividends.
Okay, and Torben is asking if you could invest in only one of those three companies, which one would you pick?
I think I would go for Bayer. I am an old-fashioned kind of person, and I love the fact that Bayer has been around for ages. And if you look at this company closely, it has so much going for it. There is so much know-how and intellectual property and strong market shares in their different products that I just cannot imagine that Bayer will not once again leave this crisis behind. It's got a strong enough balance sheet. The stock price is really bombed out. Investors have literally given up on the company, and I think that's the point when it's the most interesting to look at. So of the three, Bayer would be my top pick. But it's like asking someone who's your favorite child. It's hard to make a pick. I like all three of them.
Okay. Yeah, that makes sense. Mogens is asking about the spring effects. I think maybe he's thinking about trigger effects, but I'm not sure. Let's read the question. About spring effects, what is the most important thing in analyzing data about a company that tells us if it's going to spring in the future? Is it a complex of things, or is it more down to very few but very important data?
Very good question. First of all, I need to clarify what I meant with spring effect, because that wasn't clear on that slide. That slide from a different presentation was slightly, it lacked context. So with spring, I mean that every year in spring, in March, April, May, you notice that companies are putting out the report for the previous year, and they're publishing their outlook for the coming year, which then often extends into the year thereafter. And provided a company is on a good path overall, then usually what happens, there is a very strong seasonality to the recovery of stock prices or the advancing of stock prices. And I think in spring next year, a whole number of things at Bayer will come together. One of which, for example, will be probably the sale of the consumer health division, which is not a core business anymore, so it can be sold and generate a lot of money for the company. And I think the mentality will simply, the psychology of the market will simply change, because it'll be a new year. These dreadful things from the past couple of years and from the previous year will be behind you, and there's a much more positive outlook coming for Bayer shareholders. And I think that's what's going to drive the Bayer stock early next year. That's what I meant with spring effect. In terms of what's driving stock prices and what are the most important issues to look out for, the world is a very complex place, and there's never one single factor. Usually there's not one single factor that makes a stock price advance. It's always a combination of factors. So those of you who check out my website will see that I write research reports that are usually between 30 and 70 pages long. That's what I'm known for. It's a bit of my brand, to write very extensive research reports that people then say quite often, I love reading that, and I read it in a single evening. I like to look at a multitude of factors and create what I always describe as the 33,000-foot perspective. I like to keep everything under watch, which is always easier said than done, especially with these mega companies where they've got operations around the world, and it's not like anyone can know all details. But I struggle to say there's a single aspect. It's always a lot of work to understand the company and get a feeling for the stock price. It's always a multitude of factors, and these vary from from company to company. They vary. I'm afraid there's no easy answer to that one.
Okay, and Matt is asking, if you look at Mercado Libre, the price earnings and price to book is very high. Don't you think it's too high?
No, it's not too high, definitely not. These companies, the stock market values them primarily on multiples, on ratios such as price to sales. And if you look at the underlying assets, for example, if they spun off separate division, and for example, if they spun off the fintech division, the value of the underlying assets and their future earnings potential is so large that Mercado Libre will never trade at a low price to book ratio, for example, just as much as Amazon has never traded at a low price to book ratio in the last 20 years. The market is just looking at them on very different ratios. And I had to learn with that regard as well. I was probably too conservative for too long with these things. There is a strong case for saying that further down the road, Mercado Libre will earn so much money that they fully deserve these multiples, and even more than that. I do think the stock is cheap.
Okay, and Tia's asking if you know if Mercado Libre is using crypto technologies for the fintech division.
I have to admit I haven't looked at that one yet. I'm in South America at this moment, and I don't think crypto is quite as big here yet as in the States or in Europe and Asia. But when the time is right, I'm sure they will integrate it if they haven't already done so. But I honestly don't know.
Okay. Kenneth has a question which is not about the free stocks yet. You can tell me if you want to answer it. He would just like to hear your thoughts about Tesla, about the recent rise. Is it going to hit the wall soon or drop, or will it keep going?
If only I knew. If only I knew. I'm a great admirer of Elon Musk, and I think his number one talent is to mobilize large numbers of people through social media and through media work, and to create enthusiasm and high expectations. And he's been doing that for a long time. He's very good at it. He can probably keep doing it. From an analytical perspective, Tesla may be very expensive, but I also fully respect that there are people who say it's actually quite cheap because these technology platforms will take over the world. I've never followed Tesla in such great detail because I always felt that there are millions of other people already looking at that. And I would rather look at the companies that not everyone is following yet. So Tesla is not something I'm that familiar with, other than observing it in awe and being quite entertained by it all. But I don't have a firm opinion on it, I'm afraid.
That makes sense. Matthew is asking, 3 to 5 years from now, which of those companies, the 3 companies you mentioned, do you think has the most growth potential?
So you need to keep in mind that these are companies of very different sizes. And Modern Times Group is, it's got a $500 million market cap right now. Such a company could feasibly and more easily multiply in size if they're very successful. So you can't really compare an oil tanker to a speedboat. You have to take into consideration the different sizes and development statuses and levels of maturity of these companies. So Modern Times Group has the most upside potential, but is also more speculative. Then followed by Mercado Libre, probably, because e-commerce and fintech is just so underdeveloped in South America, and they have so much growth potential. And the growth rates per annum are just extraordinarily high in these different sectors. And Bayer could, in 2 or 3 years' time, could trade at, I'd say, 3 times its current stock price. But it's also simply a much more conservative investment overall, which is why the upside is smaller.
Okay, then Hans is asking about the timing. Like, for instance, you can see that Bayer has been going down for a long period. Like, how do you measure, like, when is the right time actually to start investing in Bayer? Because I mean, if it goes down, it can go down further and so on.
Yeah, so Bayer, the chart is very interesting, and I do like to look at charts. And I published my report on Bayer at a price of 45 euros, telling my readers that I hope it's actually falling down to 40 euros. I think at 40, it's got a very strong support, and I don't think it would fall below 40. It's now gone up to 49 because there was actually one roundup case in the United States where Bayer won. So there's, all sorts of surprises, positive ones as well, that recently came out. I think markets are currently overheated generally, and I would actually hope for a correction, and then it would be great if Bayer came down and we could pick it up closer to 40 euros. The difficulty is no one can really accurately time markets in the short term, at least I can't. And I would generally advise to buy an initial position and to keep powder dry to buy more if it becomes cheaper. And equally, if it doesn't become cheaper, then at least you have one position, and then you can always look to deploy your money in another idea. There are always new ideas.
Peter is asking if you use technical analysis. It's actually a little bit related to this because you were speaking about like something like in there was a previous button at around 40. Is it something that you look at as well?
I definitely look at charts. I am not the world's leading chart expert, and I'm not really that technical an investor. But I do believe that over time, as you gather experience and you've been following a company and its stock for a while, you also get a little bit of a gut feeling for things. I'm a big believer in gut feeling, and charts help me to shape my gut feeling. And with Bayer, I would say that, I mean, it's ridiculously cheap already. If we get very volatile markets for whatever reason, then yes, it could go down to 40, but I just couldn't see it go down any further. And that I support my view through chart analysis. But the day only has 24 hours. That's everyone's biggest problem. And there's only so many different forms of analysis we can run. And I'm primarily a fundamentalist person. And then I look at the technical side for a little bit.
Okay, I'm going to take the last two questions now. So Philip is asking about Mercado Libre, the competitive situation. Like, is Amazon in South America, and are there any like other strong competitors in South America, or is it how does it look like?
So Mercado Libre is the market leader, and Amazon is strong in parts of South America as well. But Mercado Libre does have advantages because it's focused on the region, whereas Amazon is not. And for many years, there were rumors that Amazon wanted to purchase Mercado Libre and take it over. That never happened. I'm not sure if it could happen now. There are some smaller local competitors, and keep in mind, if you run so many different divisions, you inevitably have a lot of smaller competitors. If you run classified ads for cars, then you probably still compete with some newspapers. If you offer credit cards and consumer loans, then you compete with local banks. So of course, no business ever exists in a vacuum, and they have to fight many competitive battles every day. But in terms of the overall strength of the company in the South American markets, it's in an extraordinarily strong position once you look at the different markets and the key metrics across the board.
Okay, that Bio has a more general question. Like, it's about if you, I mean, what your thoughts are about beating the market, like in the sense like when you as a value investor you analyze the market, then how do you see it? Is it possible to beat the market?
It's definitely possible to beat the market, and I also have a good number of friends who are doing that sort of thing and have done it for a long time. I may even, I would even be as bold as saying that it's probably not that difficult to beat the market if you are a private investor, if you are not under the restrictions that fund managers are on. Fund managers are under so many restrictions nowadays. They can only buy a certain amount of, number of different shares, and they, portfolio concentration can only be a certain level. Because they have to buy large positions in companies. They are not very agile when it comes to buying and selling a stake. So I think private investors have a huge competitive advantage in the market, which is enabled by platforms such as yours. And I try to do a little bit of help with it as well, with my information and the sort of education and inspiration that I try to provide. It does require dedication. It requires hard work. You're not going to achieve it right away. Everything is about, building your skills over time and staying in the game. But that was a long answer to say I absolutely think it's possible to beat the market, and I think private investors are in the best position to do so. Thanks also to the internet. You've got all this information available nowadays. 20 years ago, no one had that. So go private investor.
Okay, and then Pau has the last question, which is what is the ticker code for Bayer? Do you remember that, or maybe you can just Google?
Off the top of my head, I don't know. You have to Google that. It's not difficult to find.
No, you just Google Bayer and then ticker code, and it will come up. Okay, so Sven, that was extremely inspiring presentation. I think maybe as just the last question from me, or just could you summarize where we can see more of you, and then I'll just take the screen back while you tell a little bit about just where we can follow you and the services you have at your website.
Yes, so the best thing you can probably do is just to sign up to my weekly dispatches, because they're for free. And I think so I put in sometimes an insane amount of time into writing my weekly column. So you get a lot of stuff for free there, including specific investment ideas. Keep an eye out for me on YouTube. I, sometimes do videos with other YouTubers as well, and I'm generally very approachable. You can send me emails if you have questions. I still reply to every email, maybe not in the greatest detail, but I do reply to every email. And if you want to read some of the research reports, such as Bayer, for example, which has proved extremely popular with my readers, then it's just $49. So it's not a massive investment, and you can sign up to that through the website. But there's different ways to get hold of me.
Very good. Thank you, Swen. That was very inspiring. I'm going to sign up at your website after we get back here. So and thank you for being with us. And you found the time within your traveling. That was really great that we had the opportunity to talk to you. I hope we can talk again another time. I think it has really been a pleasure and very inspiring to see the way you live, the way you invest. That's very inspiring for us.
Thank you, and have a lovely evening over there in Europe.
Thanks. Okay, and then I'm just going to say the last words to remind you that this is part of the trading program, which is called Verdens Beste Aktiehandler. You can go to our website at investor.dk/bästa aktier and sign up for the program. And we have sites in Sweden, daytrader.no and daytrading.se, where you can sign up for the Swedish and Norwegian version of this. So please do this because we're going to have some more great webinars. So thank you very much to all of you. Thank you very much to Swen. It's been a pleasure being with you. And we'll see you all in 1 week, where we have Mads Christiansen, which is the Danish stock picker, tech stock picker, who's going to tell us about 2 of the best stocks that he's looking at right now that he hasn't been speaking about in any other channels so far. So thank you.